Thanks, Jeff. Yeah, this week or today, what I want to cover is last week's closing question. There it is at the top in yellow. I'll read it back to you. I'm a senior homeowner with a home free and clear of a mortgage. I've been considering a HELOC or a reverse mortgage to pull out some equity and found out that a reverse mortgage can include a HELOC. Is that true? Well, first of all, I'll tell you, I have encountered many times a senior homeowner with a home that's free and clear, and they have inquired about getting a HELOC or consider a reverse mortgage. So that scenario does happen. We do get inquiries like that from time to time. Well, the answer is, as I put on the screen, yes and no. A reverse mortgage does not have a HELOC per se. Now, again, a HELOC is a home equity line of credit. And of course, that is a second mortgage that is typically put on a home where there's an existing first mortgage in front of it. So the reverse mortgage doesn't have that directly, but what a reverse mortgage does include or can include is a line of credit, or what we call an LOC. It basically works the same way as a HELOC. Of course, the difference is, unlike a HELOC, if you get a reverse mortgage with a line of credit, if you draw on that line of credit, you don't have to make any payments against it. If you get a HELOC, you definitely have to make monthly payments, and that can be a deciding factor for a senior homeowner in the choice between getting a HELOC or getting a reverse mortgage that has a line of credit embedded in it. Now, how does the line of credit come up in a reverse mortgage transaction? Well, in a reverse mortgage, or more properly, a HECM, a home equity conversion mortgage, again, that's the core reverse mortgage product. It is administered or guaranteed, or actually insured by FHA. And when you get a HECM reverse mortgage, you actually will be presented with multiple ways to access the funds. And I've got them listed there in the bullet points. Of course, number one, there's going to be a lump sum amount. If you have an existing small mortgage being paid off, if you've got property taxes that are due, if you've got homeowners insurance is up for renewal at the time you're getting your HECM, those are kind of things that would have to be paid at time of closing. So that would become part of the lump sum. And you may want some additional cash in addition to what is called, the items I just described are called mandatory obligations. So if you want to get some money beyond the mandatory obligations that have to be paid at close, you would declare how much. And you can do that up to 60% essentially of the total loan amount available to you. Now, the other choices, though, are term payments. So you can choose to get a lump sum and then ask for the rest to be set up on where you get a monthly check for a specific term, let's say 10 years or 15 years. Another option is tenured payments, where you can get a lump sum at closing and then ask that the remaining portion of the reverse mortgage be paid out to you monthly for your lifetime. And of course, the monthly amount that will be calculated is going to be based on your life expectancy. And then the last way you can get access to the funds in the reverse mortgage is the line of credit, or LOC. So you can get your lump sum that you want or need to pay, plus whatever additional lump sum you want. And then if there is a remaining portion, you can ask that that be set up on a line of credit. Now, there's something pretty unique. There's a unique feature about the HECM line of credit, and that is growth. In fact, I would argue this is the most attractive feature of a HECM reverse mortgage. The credit limit of a line of credit on a HECM grows over time. If you get a HELOC, it doesn't work that way. If you get a HELOC, your credit limit on the HELOC doesn't automatically just grow over time. It remains static. So as you start to use that HELOC, you could bump up against the limit and then you can't draw anymore. With a HECM line of credit, the initial limit is established based on whatever remaining portion is available after you've chosen the other access options. And then that limit over time grows. And what's happening now, which a lot of folks don't realize, in the higher rates that we've had the last couple of years, which have affected HECMs as well, those higher rates that we currently have mean that the credit limit, the LOC line of credit limit, is growing at a higher amount, a faster rate than they were in 2020 or 2021. So the the current higher rates actually is a benefit to reverse mortgage, HECM reverse mortgage homeowners, because if they have a line of credit or they're getting one, it's going to grow at a higher rate over time because rates are higher. And this is why it's a good idea. You may have a home free and clear. Your mandatory obligations that have to be paid at time of closing may be relatively minimal. You might want to have a modest amount of cash at close, but maybe you don't really need a lot, and you don't want to have the interest accrue for money that's just going to sit there doing nothing. So this is why in some cases a homeowner will get a reverse mortgage, not because they need to access a lot of funds now, but they want to be strategic, get it in place with a large line of credit portion that they will leave untapped initially, but then understand that it's growing over time, so that at a later date, when funds are needed, maybe as they get older, they have more expenses related to their property maintenance and repairs, or maybe medical expenses as they get up, in years and have more medical services that they are in need of. That can come in handy because now you've got a line of credit that is larger than what it was when you first got your HECM reverse mortgage. And what that does is it provides you an increased financial security. So it was a good question. It's a great feature of the HECM reverse mortgage that I think a lot of folks don't really understand or realize. So that's why I always bring this up. It's a great, great feature. I think probably the best feature of a HECM reverse mortgage. And I just thought it would be a good idea that you understand that in case you're contemplating one. And of course, if you are, give me a call. I'll be happy to give you a proposal and give you some specific numbers. And with that, we'll go ahead and go on to our closing question for next week. And this is kind of an interesting one. On a conventional, actually, Jeff, this looks like the one, the header there on a conventional loan, will I get a better interest rate? That's not the question. Let me go ahead and read it to you. The last time I applied for a mortgage, I had to explain a few deposits on my bank statement. My account showed plenty of funds to close the purchase. So why did the lender want to know more about my deposits? As you can see there's the question. Again, keep in mind that I'll get into that in some pretty good detail. It is a frustrating point for a lot of borrowers. And so again, I'll give you the answer next week and it'll be on the house. Jeff, back to you.
Part that I have to circle back to that line of credit for HECM reverse mortgage. That is a brilliant play. I like that for those people. It's like you said, hey, why not, if you're in a situation right now where you're a senior homeowner and you have a lot of equity or a free and clear, if I understand you right, I would set up a line of credit. That'd be my choice, to set up a line of credit with my reverse mortgage and just let it grow.
Well, exactly right. And see, I think that's one of the things about reverse mortgages that continue to be kind of a mystery to homeowners is it's got some really neat options. In a lot of cases, the access to the funds will be a multiple choice. It'll be, I'm going to get a certain amount of lump sum. In some cases, it has to be because maybe you have an existing mortgage that has to be paid off, and you have upcoming property taxes that are due, or a homeowner's insurance renewal. So even if you don't want any cash at all, oftentimes there'll be some amount of mandatory obligation that does have to be paid out of the proceeds. But in a lot of cases, that can be minimal. I'm getting ready to close one now where the homeowner only needs about $39,000 to cover their mandatory obligations and a little bit of cash, $10,000 that they want. What's happening to the rest of the money available to that homeowner? She's going to have a line of credit of over $350,000.
Very nice.
And over time, that's going to grow. So, by the time she needs it or wants to tap into it, it could very easily be $400, $450. To me, that's a huge, huge benefit that homeowners don't realize and that they should be aware of, because that could be a great way to get a reverse mortgage, even though you don't think you need the money.
Art, this is just another example of how working with someone like you with over 4 decades of experience in the loan and home financing industry, so many things that could help that we didn't even know it existed, like the whole bridge loan thing, and now the line of credit for a HECM. I mean, that is amazing. For those of you who are thinking, geez, I have a question, the best thing to do is pick up the phone and call Art at 760-883-5700. Now, if you want to make sure you catch him while he's on his sleigh ride. Call him at his 714-612-9035. He does have sleigh-free dial or answering, so he can actually hands-free. He can still ride the sleigh or drive the sleigh, and he can answer your questions at 714-612-9035. Of course, always go to the website at mwloan.com. You can check out what's going on with the rates. The rate grid is always there, updated. Mm-hmm. More importantly, or just as important, there are a lot of tools below there. One of those is the mortgage calculator. You can kind of get an insight of, hey, where are you with some of this stuff? And of course, you can always send Art an email at art@mwloan.com. Art, I want to thank you for actually, all of 2023 of all the information you've given us, and I really appreciate you making a special accommodation today. I know you're tight on time and need to travel, but I really appreciate that. I want to wish you and your family and your loved ones a great holiday and safe travels. Next week, folks, we will be dark. We're actually going to take the week off, and then we'll rejoin you the first Thursday in 2024. Art, any last thoughts before we leave?
No, that's it. Keep in mind, folks, if based on what the Fed's talking about doing, if you are contemplating a HELOC, now's a great time. If we are going to have 0.75% decrease in the Fed funds rate in 2024, that's great for HELOCs. They'll ride down with them. Jeff, I want to wish you and your family a Merry Christmas, Happy New Year as well. And as well to all of you, our viewers, wishing you a great holidays, happy holidays, Merry Christmas, and a Happy New Year. As Jeff said, we're going to be dark next week. Hopefully the recent optimistic news in the real estate business is going to continue. Looking forward to even better 2024, where maybe we can all hope that Santa's going to bring us even lower rates that'll help get this housing market moving. So again, thank you for watching. Thank you for listening. And we'll look forward to seeing you week after next at MortgageWorks, where we have the answers and they're on the house. So long. Take care.